technical analysis expert just went on TV and predicted exactly when Tesla stock will bottom. He is saying that the stock is already oversold, meaning that it is a good value to buy, but he thinks that the bottom is not here yet. So let's take a listen to what he said.
Our next guest says, while the stock is oversold, the bottom has perhaps not yet come. Fundstruck Global Advisors Managing Director Mark Newton joins us now. Mark, good to talk to you. It's been a while. So talk to us about what you're seeing in the charts here that leads you to believe perhaps there's some more downside for Tesla.
Well, I think if anything, one should look at it from the opposite perspective, is that why should there be a bottom when a stock has been down over 60% in just the last 3.5, 4 months? I think, as we approach a new year, everybody always likes to say, well, it's oversold and therefore we can just step in and immediately expect mean reversion. But, technical analysis doesn't really work that way. And anything, if 2022 has taught us anything, it's that, it's almost a fallacy to expect that we can just run in and buy our favorite names just because they're down substantially when we're still within a bear market. So, yes, Tesla is now officially oversold. We're getting closer to targets that I think are meaningful.
Kathy Wood is buying more Tesla stock as well. Today, she bought $3.2 million worth of Tesla stock. She still has $255 more million left that she can spend on Tesla stock. So she's dollar cost averaging. Me too. Based on projected earnings of Tesla in the next basically 12 months, the forward price to earnings ratio of Tesla is now 22.5 roughly. So Tesla is cheaper than Coca-Cola, which of course has a forward PE ratio of 25 because, Coca-Cola is making fully self-recycling bottles.
But, a few months ago, I did a number of different interviews and we took a look at cycles and counter trend exhaustion techniques and a lot of things that people like myself using technical analysis like to do. And, at the time it broke $206 back in early November. That's when Musk was selling shares. And that indicated this break of a giant head and shoulders pattern should start to lead the stock lower. Volume expanded on that, really confirming the breakdown. And so, I'm looking right down under $100 right before Tesla's earnings happen, right towards the end of the month. And that's when a lot of my own cycles start to show the chance for a bottom. We could bottom and start to rally into the spring. But, I think just looking at a few point bounce today, it's up, I think at 119 already. Still difficult for me from a momentum standpoint to think that lows are in, and also from a cyclical standpoint. So my work is not lining up just yet.
Mark, what is counter trend exhaustive analysis and how does that apply to Tesla right now?
Well, it's one of the tools in my, in my toolkit. I look at the work of Tom DeMark indicators for evidence of exhaustion, not only of uptrends, but downtrends. And I use them amongst many different time frames and on many different indices and stocks. And so those are helpful to be able to buy dips within downtrends and also to sell when something is reaching a possible peak. And so looking at a weekly chart of Tesla, it's simply early by about 2 weeks right now to think that there's a potential low. So that's why I looked at when Tesla's earnings were, and that all of those line up towards the latter part of January. So it makes a little more sense for me that initially this little bounce might be sold, but pulling back over the next couple of weeks would offer some opportunity for traders that might be looking to time better entries.
If we bottom at $100 per share, this would make Tesla's 12-month trailing PE below 30. It would be about a little bit over 29. And assuming that the earning estimates don't change, then this would also be under 20. It would be a little bit over 19. Keep in mind that for the trailing PE, we are expecting it to go up quite significantly because Q4 expectations are quite a bit higher than for any quarter before. So in just about, less than a month, the PE ratio for last 12 months should look even more ridiculous.
I've been trying to talk to investors about over the last 25, 30 years. It's really important to take the blindfold off and realize that all this news or, an outside influence, somebody like Musk really has very little to do as to how a stock can move on a day-to-day basis.
Except, of course, when Elon sells Tesla stock. He has quite a bit of influence temporarily to move a stock down. Here's Elon's last sale. So this is when the market closed on Friday, and then on Monday, Elon sold, when he sold again on Tuesday, and then he sold again on Wednesday. Yeah. Elon does have enough power to move a stock down, at least a little bit, for sure, certainly. And here's perhaps the most obvious thing. Tesla shares tank after Elon Musk tweets the stock price is too high. Yes, this actually happened. If you are a new Tesla stock investor, what we are going through right now is nothing new at all. We are just back to the normal. And certainly Elon does have influence to move a stock, even on day-to-day basis. So I would strongly disagree with that statement that he made.
Many people, as you remember, doubted Tesla literally all the way up as it was moving higher. And even on the first pullback now, now everybody's on board and believes Tesla. And as it's falling, they're all trying to say what the stock is bottoming, and it's clearly a buy because it's undervalued. Look, that's human nature. We all want to buy low and sell high. If anything, my work suggests that it's almost always better to concentrate on those stocks that are hitting new all-time high territory versus looking to buy dips when the market is still within a bear market.
If you are a trader and not a long-term investor, where you want to hold stocks for 10 or 20 years, like Warren Buffett, for example, yeah, that makes sense because you are literally betting against the trend. In red here, I have a shorter term moving average, and this here is a longer term moving average. So if you are a trader, one thing that can really help you quite a bit is to never go against the trend. Right now, if you look at this exponential moving average, then you will see that the trend clearly started to reverse around here. This is when you can see the line starting to go down, and it sort of came back here, and then it was down again here. So you are clearly moving against the trend. If you are a trader, never bet against the trend is one rule that many traders or some traders follow. However, the same can also be said for investors. It depends on how long your investment horizon is, and then you input your own trend, basically. So if I look at a simple moving average here, but just based on a much longer time period, you can see that it's still clearly going up despite Tesla stock dropping so much. Why is that? It is because Tesla is still way up over a long period of time. So if I'm investing for the long term, the trend long term is up. And that's generally true about the economy as well. So that's one reason why I never want to short anything, because even bad companies can often still go up. You can certainly make money betting on stocks to go down, and shorting them is just something that I don't want to get involved in. It's just too much effort, too irritating. I would just rather buy more Tesla stock. Of course, assuming that I believe that the price that I'm paying is fair and that future cash flows are looking very good, which I believe is the case for Tesla stock.
So, to answer your question, I don't know that Musk is necessarily, everybody thinks now that he's distracted or that supply and demand is slowing, supply is up, and those are reasons maybe not to buy. And so, you can actually take those fundamentals along with the technicals and say that it's probably still a little bit early to think that Tesla, has made a bottom.
One of the other, just to dig a little bit more into your analysis of Tesla specifically, Mark, I know you're looking at cycle analysis also, and we have a chart of that from your note. Can you sort of explain, as much as you can in layman's terms, sort of explain that to us? And you also mentioned that, Tesla might not bottom in the near term, but it sounds like further out, you think maybe it could. When will you have sort of the information you need to determine that?
Well, initially, I'll put more weight on oversold conditions and the market indicators potentially signaling a buy by the end of the month. But a lot of the cycles, the most accurate one for Tesla over the last year is just the 107 trading day cycle. It occurs about once every 5.5 months. If you look back, it's pinpointed almost every major peak and trough in Tesla over the last year. So until that shows some evidence of not working, my thinking is that we're likely to see a bounce, but then I think we probably are going to show further weakness into the months of April, May before we really truly bottom. And I think I can say the same about the U.S. stock market as well. So, what I did was just take a cycle composite, and it's through the foundation of the study of cycles. They provide tools where one can look at highs and lows over the last 5, 10 years, 15 years, 20 years, and really create, a composite to really show you how a stock and or an index might have the potential to bottom or peak out. And so it's one part of the analysis, but I do find it quite useful.
Technical analysis is never fully accurate. As you can see right here, it was supposed to keep going down, but the stock actually went up a little bit. And then here, it was supposed to go up, but it actually went down. And then here, the stock was supposed to go down, but it actually kept going up. So it's not exactly every single time it's going to be accurate, because if it was, you can trade on daily charts, 4-hour charts, 1-hour charts, 15-minute charts, even 1-minute charts. And if you could reliably use technical analysis, you can, for example, trade Forex, where you trade currencies. And these can be very volatile. You can leverage up. And if you have a very good model that actually works very well, then you will make incredible returns very quickly. And then everyone will want to invest in you managing their money. And then, of course, you would be a billionaire. Now, understanding technical analysis, it certainly does not hurt. In some places, it can be useful. And Wall Street does use it to a certain extent, but I don't use technical analysis for myself to actually make long-term trades. But if this is right, then Tesla stock is supposed to go up right now, and then it is supposed to go down a lot later this year, which is when he said Tesla stock would bottom and then go back up. I am personally dollar cost averaging, so I'm not paying much attention to technical analysis. If I was to do a big, huge lump sum all at once, then it might be something to consider a little bit, but fundamentals come first for me. And these are 48 reasons why I only own Tesla stock in my stock portfolio. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.